Hello, welcome to New York Finance, Credit, and Tech.
New plan could extend child tax credits to Americans who aren't parents. A new plan from Democrats would award the money to whoever is caring for the child, regardless of whether they're related. This flexibility would accommodate people in various living situations. Researchers claim hundreds of thousands of children do not qualify for the benefits because they live with a family friend, just as one example. Nobody can claim kids who are being raised by someone who is not a close relative. Those kids just get cut off from the break entirely, said Jacob Golden, a former Treasury official who now teaches at Stanford University's law school. Opting out is recommended for those who know their household circumstances or tax situation will change and want to avoid updating the account information in the IRS portal. This could be the case for separated, divorced, or unwed parents who alternate custody of a child. Opting out is also a smart decision for parents who are concerned the IRS might send an overpayment based on old tax information and who don't want to worry about paying any of that money back. This would be the case if household income went up or if a dependent aged out of an age bracket before the end of 2021. Some families may have been skipped if they lived in the United States for less than half of 2019 or 2020, or if their financial situations in those years disqualified them from receiving payments even if those circumstances have changed in 2021. Families who have new babies or adopted dependents need to update their information in the IRS portal to make sure they receive the credit. The NPR found increasing the CTC coverage rate would be required in order for material hardship to be reduced further. Self-reports suggest the lowest income households were less likely than higher income families to receive the first CTC payments, the paper added. As more children receive the benefit in future months, material hardship may decline further. Even with imperfect coverage, however, our findings suggest that the first CTC payments were largely effective at reducing food insufficiency among low-income families with children. Thousands of kids in Michigan have not received CTC. About 3% of children in Michigan aren't receiving their child tax credits, according to media. Nearly 65,000 Michigan children have not yet received the child tax credit payments for which their families are eligible, the outlet noted. Alpena News revealed this is likely because their families may not have been required to file taxes in the last 2 years. About 330,000 kids don't currently qualify for their caretakers to receive child tax credits because they live with a cousin or neighbor, someone who is not considered a close relative, the IRS reported. The kids who get excluded under the current relationship test are a lot of the kids who would benefit most from receiving the financial benefits of the CTC. These payments would help maintain a secure environment with financial and other support for education or similar activities of the individual. The new proposed rule would require a child to live with a person for more than half a month to qualify for that particular month's payment. Older dependents qualify. Parents with 18-year-olds can claim a one-off $500 stimulus check. Dependents aged between 19 and 24 years old must be attending college full-time to also qualify for $500. The payment will come when families file taxes for 2021 at the start of next year, according to media. They are not eligible for any other stimulus check. It will also depend on how long the dependent lived with the family and their level of income. Low-income households are not required to file tax returns, meaning some families in need could slip through the cracks when the IRS begins distributing payments next month. To ensure all eligible Americans can access the payments, the IRS launched a tool on its website last week to register for the tax credit. Non-filers will need to have their Social Security numbers handy, as well as their children's. If they have a bank account, they'll also need to have their routing and account numbers to hand to use the portal. Paid leave for families. Under the Family and Medical Leave Act, FMLA, of 1993, eligible employees can take up to 12 weeks off of job-protected leave each year. but there are a couple of issues with the act. Not every employee qualifies for the FMLA. According to the Department of Labor, just 56% of employees are eligible for the FMLA. And most importantly, although qualified Americans are guaranteed time off, it's unpaid. This is problematic because the majority of Americans live paycheck to paycheck. Compare this to other countries like Estonia, which offers new mothers up to 18 full months of paid leave. But there's a chance your employer might offer paid leave, but it's not common. In fact, only 19% of U.S. workers have access to paid family leave through their employer. One-off payment. A one-time payment of $500 is available for families of children ages 18 to 24. The IRS has laid out a few eligibility conditions. A child who's 18 years old must be claimed as a dependent. Children 19 to 24 must be attending college full-time. Each child must have a Social Security number. Thanks for watching. Leave comments below. Stay tuned for more news and updates. Don't forget to subscribe to our channel.